All right, we're starting to get some folks coming in.
It's adding up quick. Welcome, everybody.
Yeah, welcome. I'm just looking at some of the names here on our attendees list. See some familiar names. Welcome, guys. We'll wait just a little bit longer for everyone to jump on. Sometimes the webinar delays in getting people in. We'll start to see it leveling out here in just a second. Hope you're all having an awesome day today with social distancing, even though in some parts of the country it's been slightly loosened. Here in the Salt Lake Valley, our governor has said that it's no longer stay home, stay safe. It's more of a stay safe and stay smart kind of mentality. Although we do have some restrictions, and businesses and restaurants still have some restrictions as well. Homeschooling, I hear, is quite the challenge for a lot of us. Kudos to all of you for all your efforts with your kids and during this time. It's a little crazy. All right, so it's good to have you all here. So this webinar is for all of our great clients on a national level. And I'd like to welcome each of you here and thank you for your trust in your business over the years. It's our goal to always be providing value for you, especially as we're navigating this unique environment due to COVID-19 and the pandemic. I'd also like to welcome our franchise partners and their teams who are joining us from around the country. So expect to have some good conversation here and good content for you. Just a couple housekeeping items before we dive in. So for the sake of everyone's sanity, seeing that there are many clients, a few hundred people at least on this call, everyone's mics will be muted. And but that doesn't mean we don't want you to participate. So we'll be asking some questions throughout the presentation today and asking for your engagement on the chat. I want to thank those who, through the webinar registration, submitted some questions. A lot of them will be answered throughout the presentation just by the content that we have. But we'll also do our best to address some of those questions, as many as we can at the end. If you do have a burning question that as we're going along, just feel free to use the Q&A button at the bottom of your screen. Zoom has a little QA tab there that you can plug in any questions you want answered. For interacting using the chat, and you can see that as well, it should be right there in your toolbar. Unless you have a direct comment for myself or Brandon or Chapin, our presenters today, please make sure that you set the chat setting to be communicating with panelists and attendees. We want to make sure that as you're chatting, if you're wanting to interact with people, have the attendees selected. Otherwise, no one else will see your comments. We have a lot of content to cover. If we don't get to your questions today, please reach out to your local team. They're there to help you out and answer some of your questions after the workshop. If you are unable to attend the entire webinar and need to end early for whatever reason, feel free to do that if you need to. It will be recorded and we'll make it available in the next couple of days for you. So here's what you can expect today. We're going to be discussing a lot of hot topics, covering some of the national acts and orders, their impact on rental owners and property managers, and how we can all be prepared, how Keyrenter is operating under all of this on your behalf. And we'll give a brief overview of some of the opportunities and that we see coming out of it all. One thing I want to note is that although we're covering some national topics, some of the specific processes being implemented may be modified to accommodate state, county, and even city requirements. So please talk with your local Keyrenter team if you have specific questions relating to your property or your specific situation. All right, so just real quick on our presenters today. So I am Nate Tu. I've been involved in owning and managing rentals since 2007, and I'm super passionate about this business and Keyrenter. You could say that I bleed green because of Keyrenter. It's a real part of who I am, and I enjoy the friendships I have with our franchise partners and also many of you clients. I do what I can to stay active in our industry on a local and a national level.
All right, and I'm Brandon, here in Denver, Colorado. So yeah, likewise, I own a few rentals myself, so hopefully can wear that hat and see things as some of our clients on the call today. And yeah, try to stay active too, involved with the Franchise Advisory Council and the Denver chapter of Northland.
And good afternoon, everyone. I'm Chapin Hemphill. I'm the owner, operator of Keyrenter Silicon Valley. I am a co-owner of Keyrenter New England and a happy participant on the Franchise Advisory Council. I come from many couple decades in multifamily world, where I started off in the leasing office and rose to an asset manager, and bring that knowledge to my Keyrenter clients. So thanks for having me today.
All right, so we want to hear a little bit about you. It's your turn to participate now. So in the chat below, make sure you set it to include attendees, but let us know where you're joining us from. We want to hear where you're coming from around the country. We may have some people overseas and other countries as well joining us, but let us know in the chat where you're coming from. All right, we've got, oh, this is awesome. Thanks, guys. So San Diego, Denver, Texas, California, Portland, yeah, all over the place. This
all
is
over.
great. Very cool. Welcome again. And then share with us how many rentals you own. I'd like to get an idea of where you're at with your portfolio. A lot of people have one rental, some own dozens of rentals. Give us an idea of where you're at in your portfolio.
Wow.
Okay, very cool. Thank you for the participation. And finally, how long have you been a Keyrenter client? Maybe you've been with us a couple of months. Maybe you've been with us 10, 12 years. I'd like to get an idea of where you're at. Awesome, thank you. Okay, very cool. It's so cool to see, you know, again, where you're at with your portfolio, where you're coming from. A disclosure alert, you guys. Okay, so the three of us, we're not attorneys. We are pretty well connected with attorneys, and we stay up to date as best we can on government leaders and other local leaders. And also this webinar is given as a snapshot. So this is taken at this time. And so we don't know what's coming up on the horizon over the next several months. However, it's important to know that, you know, we will be looking at doing further webinars, further education as we know more as it's going along. So I'm going to now hand things over to Brandon to kick things off for us today.
All right. Thanks so much, Nate. Let me take over the presentation here. All right, so I'm going to cover the CARES Act. This is the big piece of legislation that had widespread impact across all kinds of different industries and that kind of thing. As it relates to being a landlord, what we do, I think the best way to think about it is, you know, it was really put in place as just like a optional deferment of payments, kind of let's make sure nothing too drastic happens, let's be flexible with one another, that kind of thing. So I'm going to cover mortgage forbearance, eviction restrictions, and a couple other things in there that may be relevant to us. So there we go. All right, cool. So we'll start with mortgage forbearance. Hopefully I can just help you answer the question, you know, could this be something for me? So some of the basics of it. First thing to figure out is if you qualify. So basically this is restricted to federally backed loans, so that if your loan is backed by Fannie Mae or Freddie Mac, or if it's a different, so there's some different HUD products, but the bulk of you know, if you have a 30-year fixed loan, the chances are it is federally backed. but there's a way to figure that out. So if you just Google, is my loan federally backed, or Fannie Mae, Freddie Mac, look up, you'll have to do it separately, but yeah, you'll be able to put in your information and kind of get an answer to that question. So then one other little piece there, you had to be current as of February 1. So if you were late on your loan at that point, then you don't qualify for the mortgage forbearance. So one of the specific provisions that was put in there was it will not affect your credit, that it won't report late or anything like that. So good news there if you decide to utilize this tool. And yeah, just for some of the details, basically what it was is when you reach out to your lender, they're going to have to give you 180 days of either reduced or no mortgage payments at all. So you can also request up to an additional 180 days. One of the things that's just totally vague in there though is how this works at the end of that period. One thing I did was I have a few loans that I thought were federally backed at least, so I thought I'd dig in and kind of see what I could figure out how the servicers are handling this. So the first one I looked at was with Chase Bank. I figured Chase was a big servicer, but they had no option on there, nowhere I could see to find more information on if what access I had to forbearance and how that was going to work. Next one I looked at was with Bayview Loan Servicing. So they had a really streamlined, clean process for, it was kind of, you'd answer some questions and basically determine if you qualified. And then it kind of laid out how it would work, and you could request the reduced or basically, zero payments for this term. This one was, they were totally silent as well on when these missed payments or skipped payments were going to be due. So obviously if they tack it on at the very end of the loan, that's great for us, or that'd be a really simple way to handle it. But I think kind of the fear is that it's a balloon payment due, right when that period's over. So yeah, I didn't know. I could have called them or whatever to get more info. But the last one I looked at was with Loan Care. They also had a really easy to use kind of automated feature to request the forbearance. And they did make it clear that these payments would all be due lump sum once that period was over. So one other thing that was in the CARES Act was some changes in this time of how you could access funds in your 401k. So I don't want to get too far into this just because there's a lot of little technicalities and nuances for your situation. So certainly something to talk with your financial advisor about, but it may be another place to look if you anticipate, some financial hardship here and want to have some contingency planning in place. So the one thing is that usually if you're not of age, if it's 58 and a half or whatever it is, then you'd get a 10% early withdrawal penalty on the 401k, and you'd be capped at 50,000. So they expanded that to 100,000, but you can't, and they waived the 10% penalty. So there is still some tax implications there if you have to show that as income, but that can be stretched over a 3-year period. You can also pay it back, which would relieve that tax burden. But yeah, it may just be another way, and maybe something you could use either in conjunction with the mortgage forbearance or instead of, but yeah, certainly some options there. All right, so the other piece is the tenant side of the CARES Act. So we're going to look at tenants' rights, and I just want to highlight this is only for those same qualified properties. So it has to be that federally backed loan. And I think that kind of as they viewed it, like the government's restricted to imposing kind of this legislation on these federally backed loans, not on kind of individuals in general. So basically, here's what the most important aspects of it. So they put this 120-day moratorium on evictions. So you're not allowed to serve a pay or vacate. In Colorado, that's called a demand for possession. But yeah, I think every kind of municipality is going to have some version of that, or every state. You can't file an eviction for money owing, and you can't charge late fees. One thing I'll say too here is this. Lots of different states and cities have overlays that are actually going to be more restrictive than this, more demanding. At this point, I don't think anywhere has actually said rents forgiven or canceled. But yeah, some of them are putting a longer period in place for deferring rent and things like that. And like for example, where we're at in Denver, the courts are closed, and the mayor said, "Hey, police force, don't use your resources for evictions." So it's kind of, there's nothing you could do anyway here. And then until December 31st, they're just wanting to build in that non-renewal notices or notice to vacates have to have at least be at least 30 days out from the end of the lease so yeah, nobody's forced to move on short notice and that kind of thing. All right, so we had a question come in on the registration. Any other funds available for landlords? So yes, there was initially some funds there, and it looks like some more funding is going to come through that the SBA will administer. Specifically, the EIDL, the Economic Injury Disaster Loan, can apply to you as a landlord. Again, like very kind of nuanced in how you qualify for that and everything. So I'd refer you to your local banker who can help you kind of, figure that out and know where to apply. And yeah, certainly as we see the second wave of funding coming through, it'd be a good time to get in line there and make sure that you access that if you can. I think initially it was $10,000, and then they lowered it to $1,000 specifically for landlords. But yeah, I don't know how that'll change as we get more funding in, but certainly something to ask your banker about. Okay, so next thing we wanted to cover was just the impact that we're anticipating and kind of what we're seeing as a franchise on this. So we're going to do a poll real quick. So let me get this launched for you. So I've got a couple questions just about what impact you've already had, or if there's been any impact already, and then also if you anticipate having this. Okay, sorry, I shared the wrong one. Here we go. Okay, is that showing up for? Cool, I'll give you guys some time to vote on that, but basically we want to know, if you're seeing any impact already, and then if you anticipate seeing some impact here. So cool, votes are coming in quick now. All right, looks like we're at about 25% saying yes, you've already had an impact, 75% no, and then about 35% anticipating some sort of impact. So give it a couple more seconds for you to vote, and then I'll end the polling.
Yeah, and one comment on this, Brandon, on the second question, 54% not sure yet. And I think that's going to be, I think that's expected, because we're still in April, and we're not sure exactly how things are going to be impacting over the course of May and June. And so I think that's an appropriate response that more than half are still just not quite sure yet.
Absolutely. Cool. Well, thanks for everyone for voting. Hopefully we can see those results, and yeah, that helps us give a snapshot of kind of where you guys are at and thinking on this. So cool. So here's what we see as the impact coming. I think the primary one, this is kind of obvious, but tenants' inability to pay and just our limited recourse there. So one of the things we did, we looked across the whole Keyrenter system at kind of what delinquencies have been like up until this point. So we pulled this from a month ago, so 23rd of March, and then looked at it again today. And I mean, early on, we were talking through this and trying to estimate what kind of delinquency we anticipated, and people were saying 5, 10, 15, 20%. We've only, at this point, we're only seeing 2.43% increase in delinquencies from this time last month. So I thought that was pretty encouraging, and Chapin will go through some of what we're doing to kind of limit that impact as much as possible. But yeah. Let me close that out. Okay, so the next thing, just longer days on market as far as leasing properties, fewer qualified applicants. So yeah, something we're monitoring. We certainly saw, like, this would be a time of year, at least in Colorado, where we typically see activity kind of ramping up through March, and instead we saw things kind of flat and even going down a little bit, like the last couple weeks of March, first week of April. But the last couple weeks we've seen a really good rebound. We had more than double the kind of average weekly applications over the past week here in Denver. So yeah, really encouraging there, and something we'll continue to monitor, but yeah, hopefully can really minimize the impact there. One thing too, we've had some maintenance vendors just reach out and flat out say like, hey, we're not doing any work in occupied properties and that kind of thing. So some of those non-emergency issues we're pushing out a little bit, but for the most part, we're able to find vendors that are doing work and continuing to keep the tenants happy and the home safe and that kind of thing. So I think one that kind of plays into that is just, I think it's on all of our minds as franchisees of just, having some limited capacity as we reopen and see this like flood of leasing activity, move-ins and move-outs, work orders, especially these deferred items that we kind of, we're kicking down the road. So yeah, it's something we're planning for and trying to navigate to ensure we don't have any issues there. But cool. Well, I'm going to hand it back to Nate on a few things you can do as owners to be prepared. You're muted, Nate.
That's awesome. Thanks for letting me know. I would have kept going. In the event that there is an issue, which again, as Brandon mentioned, the impact has been pretty minor across our national portfolio of homes and rental units. But we're hopeful and optimistic about May and June, but there's some things that we should be doing in order to help ourselves be prepared. And the primary one that I always go back to with rental owners is to have a 3-month rental reserve. And I can't stress this enough. And it's actually part of our principles of rental success. What this means is essentially to have a 3 times the monthly rental amount or more in a separate bank account used exclusively for your rental property. Because having this will allow you to rest easy, and for all rental owners to rest easy, knowing that should something happen, say the tenant loses their job or they get furloughed during all this, or they have a reduction in income, or you have an expensive repair or some other situation, that we won't have to dip into personal funds as investors to cover those sort of things. We have the funds to cover it. And when we're prepared, I always say when we're prepared, we can have that peace of mind that we all need. And so you may not have had any impact yet, and that's great. And we hope that you don't. But having this 3-month reserve will be important, not just during this time, but on an ongoing basis. And so I do want to ask this question. This, again, is an anonymous poll. Want to put this out there and ask you guys, let me put this here. Do you already have a rental reserve of 3 times the monthly rental amount in a separate bank account for your rentals? And it's okay if you don't. I would just really encourage you to start working on that today and do what you can to make that happen, because it'll allow your experience as a rental owner to be so much better as you have that in place. So right now it looks like we've got 61% that do, 24% that don't, 17% that are working on it currently, which is great. Looks like that has leveled out, so I'll end that and share the results with you guys. Thank you for participating there. It's good to know where everybody's at. And again, no judgment. If you're working on it, awesome. Just keep working on it and get to that point. So the next item here is having patience, especially during this time where this is an unprecedented time. A lot of us have never gone through something like this. The government hasn't. And, you know, it's important that we have patience, not only with our residents, who many of them fall victim. A lot of them are good people that are struggling. And if they have challenges, let's have patience with them. And as well as our government, as we're working through this together. One of my friends said to me recently that there's the world that we want, and then there's the world that we actually live in. And oftentimes they're not the same. And we have to have that patience as investors and rental owners. And the other thing is just being ready and able and willing to adjust and adapt to the times. And those that are really prepared to adjust and adapt are going to be able to seize additional opportunities that others can't see in front of their face, and will be able to rise above all of the rest. And then if absolutely necessary, using some of these tools that Brandon mentioned earlier, the SBA loan for rental owners, because when you own a rental, you actually own a business, whether it's under Schedule C or it's a separate entity. So keep that in mind. And although the EIDL is dried up right now, it should be getting some additional funding. And so if you're in a position of hardship, seek some of that assistance, as well as the CARES Act for mortgage holders that he went over. And with that, we're going to dig deeper into some of the ways Keyrenter is operating under all of this. I'm going to let Chapin take over from here. And Chapin, you're muted like I was. Here, I'll unmute.
Okay, there you go. So you can hear me and you can see my screen, yes?
Yes.
All right. Well, thank you everyone for joining. Again, I'm Chapin Hemphill. I'm based here in Silicon Valley, California. And I'm going to talk a little bit about what Keyrenter is doing to operate and collect rent. So before we start, a quick little exercise. Let's see if we can find Waldo in the social distancing edition of Where's Waldo. Can anyone find Waldo? Free copy of this webinar to the first person who finds them. I'll give you a couple more. I'm just kidding. All right, so how is Keyrenter able to operate? A common question I've been receiving in the last 5 weeks, besides rent collection, is how are we able to do the other things that we do with social distancing and stay-at-home orders in place? Isn't property management a people business? Don't you have to interact with tenants to get rent and provide maintenance, inspect properties, and so on? Well, yes, we are indeed a people business. However, Keyrenter and its franchisees have set ourselves up to operate remotely, some of us from the beginning. And our vendor partners have provided the tools and services that we need to provide those services. So maintenance is a big deal, and we're not taking our eye off that ball. Shelter-in-place mandates. Our maintenance department is busy on a good day, whether it's major or minor repair, and many of these issues fall within essential services. And as per usual, you don't want to deal with this stuff.
Oh gosh, Chapin, that's not a picture from one of your rentals, is it?
I'll never tell. All of our vendors have been vetted, tried and evaluated, and they understand our expectations. They're licensed and insured, and they take photos and provide us documentation of the issues they find. Our vendors are often our eyes and ears. And right now, they're the folks that are on the front lines. They are essential in every sense. And they prioritize their days based on our needs because we have this symbiotic and established relationship with them. Our marketing efforts have led to a wide and engaged prospective renter pool, even in these times. They have the ability to visit the property via video tours on our listings through in-person showings, and we're following all local and national guidelines, of course. And some offices may be set up to offer self-showings that include a thorough self-registration system. Essentially, we have been showing our properties to potential renters despite the obstacles that we've been facing. I can speak to my market here and say that while leasing activity essentially came to a halt when the shelter-in-place orders came in, today and for the last 10 to 14 days, leasing activity has picked up substantially. And interest from prospective residents is strong again, which is awesome. It's very encouraging. So risk, liability. Liability issues are not just caused by tenants. In fact, most liability issues are results of mistakes and problems and lost rent or undisciplined enforcement, fumbled evictions, and then compliance with federal, state, county, civic regulations, orders, temporary mandates. The landscape we're in has become exponentially more complex, and there are so many of these COVID-19 based mandates coming at us right now. They're coming so fast, it is head spinning, all of which require solid processes and compliance with these orders, properly drafted legal notifications, consideration for our tenants who have been impacted, protection of our owners' assets and financial position, and so on and so forth. As a United franchise, I can tell you we are on it. Which brings us to the question on every rental property owner's mind. How is Keyrenter handling issues when our tenants or our renters cannot pay rent? So normally, non-payment of rent might be a confrontational situation. Today, our mindsets with COVID-19 have completely shifted. We are not in a battle with these tenants, quite the opposite. They're going through some tough situations. Employment numbers are unprecedented right now. Our clients need collected rent to pay a mortgage and anything else that rental income supports. And rent adds up quickly. So these are really challenging conversations and problems. Before I jump into some of our best practices to handle these challenges, let me just quickly state a disclaimer that what I'm about to share are general guidelines and examples of what might be done should any Keyrenter office encounter a situation where the tenant may have challenges paying rent. You will talk to your property manager, and before moving forward with any situation, you'll have the information you need to be part of that conversation. You'll have options and resources that we are supplying to you to support your position. And in some areas, there are different requirements for each city within a county. So this gets crazy. A different process, a different form might be required, a different flyer might be required, or a different legal notice might be required for each city within a county. And even then, additional considerations may be necessary by a federal or state order. Our normal everyday processes become very convoluted, but we understand them and we are prepared to protect our clients as best we can. So with that said, let's jump into how this might work. Again, general guidelines and examples here. First, we recommend proactively communicating with residents on some level. Communication will win the day, and this is the time for proactive over-communication, both with you, our clients, and with our tenants. All Keyrenter offices have already reached out to the residents in some form. And this can be done in a blanket communication to all of them or as the issues come up as necessary. But the point is to talk to them, reach out and speak to these people. We want to gauge their situations. We want to encourage them to let us know where they stand. And by the way, we encourage communication to be in writing or that the conversation is memorialized and documented, The communication might go something like this. Hi, Nate. I wanted to reach out to you and check in to see how things are going with everything going on. I'm here to help and support you. We've been asked by several tenants what to expect with rent in May. Please realize that rent is expected to be paid. You may have seen some recent media coverage about rent deferments. Keep in mind that deferments are reserved for those directly impacted by COVID-19 and does not forgive rent. And if you've been affected, please let us know. I'd like to get some options before it's past due. If the tenant responds with a claim of a hardship, we proceed to a more careful and critical communication. We want to make sure that we step out of ourselves and consider what the tenant is going through. We show compassion, empathy, and we keep things positive. We set the stage for the next steps of communicating with them and communicate clear and appropriate expectations. We've all heard and been on relative edge about eviction moratoriums, rent deferments, the false interpretations and rumors about waived rent, and even rent strikes. We want to make sure that our tenants completely understand our position and why our position is important for them to understand. Again, we do this with compassion, empathy, and positivity. If we do not hear from the tenant at this point, we alert the property owner, we alert you guys, and loop you guys in going forward. Although our hands may be tied in terms of the recourse for non-payment of rent, our clients are included in this discussion and the situation is completely transparent. The next communication with the tenant might look something like this. Hey, Nate, I'm very sorry to hear about your hardship during this difficult time. The current situation of COVID-19 has been difficult for many people, and we will do everything we can to help out through all of this. We are confident that as a people, a community, as individuals, we will get through this and even be stronger for having passed through this trial. Keep your head up. This letter has a lot of information, and we go on to say, or this communication has a lot of information. We emphasize that rent is still due, that a deferment is possible, but that does not mean we're waiving any rent. We offer the tenant resources, and this would also be the time to include any flyers or forms or anything that's required by your state, county, or city. This example communication continues, and best practices and requirements mandate that we waive any late fees, that no notices for non-payment will be posted until the crisis subsides. And finally, in this example, we lay the foundation for the next steps, a resolution to their problem, a mutually beneficial agreement, and even hope. Now, I want to pause just for a moment and reiterate that this part of the communication with the tenant must be carefully crafted and based on local government and civic orders, local resources, and legal advice. Additionally, your Keyrenter office is making sure that the process and the criteria is the same for everyone. And let me say that again, the process and criteria must be the same for everyone. The risk with treating one person differently than another is substantial. The last thing you want right now, or any time for that matter, is a fair housing lawsuit, which, you know, is especially painful when you're just trying to do the right thing. So once a tenant establishes that they would like a deferment, we initiate a deferral process. The deferral process encompasses a single policy for all tenants, a single set of criteria for each applicant, and a single rent deferment agreement. And I would like to point out a couple things here. Once again, we ensure that we are aligned with the best practices for our markets. Just as an example, where I'm at, the best practice for a tenant who demands a deferment without providing all the required criteria would maybe to move forward with a deferral agreement anyway. So that's confusing. Does that mean essentially anyone and everyone can get a deferral agreement where I'm at? And does that mean the application is useless? And the answer is yes and no and maybe. I know this is confusing and counterintuitive, but the best practice where I am is to offer an agreement to anyone that asks for it, but we want to make sure we're going through all the steps, we're documenting the refusal or anything else. And the idea here is best intent right now. When the dust settles, we have the documentation for everything that happened along the way. And again, Keyrenter is transparent with our clients throughout this process. So you'll understand why we're making decisions. At the end of the day, and when the dust does indeed settle, our objective will have been to do everything we possibly could have done to mitigate your risk and maximize your cash flow during this time. Very incredibly unique time. Our object is to make sure we maintain the long-term plan of your rental property and that we look back together. We see this time as a bump in the road that we were able to efficaciously navigate. Thank you. And with that, I'm going to pass it back to you, Nate.
Okay, very cool. Okay, so to conclude, you guys, and before we go into some of the Q&A, I just want to talk about a few different ways that we can view all of this that's going on right now, as well as give some of my thoughts as we look back on this time in the next year or two. And you've probably been seeing this going around social media. You know, we can look at this time as COVID-19, or we're going to look at it as opportunity 2020. And there's a few different opportunities I want to go over and discuss. But one of the things that's important to recognize is just that And this is another thing I grabbed from I've seen on a couple webinars and seen this quote going around, that dollars are in the change. And that really truly means that those of us who are willing and able to adapt and change and grow, we're going to seize those opportunities. Okay. And one of the opportunities that we have right now is we have really great interest rates. We're nearing all-time lows, historical lows. So it may be a great opportunity to refinance your property, increasing cash flow. Maybe you want to buy another rental, increase your portfolio. It's a really good time to do that. One of the questions that we've been asked, and I get asked from different clients and different people as I talk to them on an ongoing basis, is the housing market going to crash? Although I have a degree in economics, I rely heavily on the true expert in this field to answer this question. And so one of the individuals I look to is Dr. Lawrence Yun, and you may have seen him on CNN or different media outlets. He gets interviewed all the time. He's the chief economist and senior vice president of research at the National Association of Realtors. And he's really considered the expert. He was recently on Brian Buffini's podcast where he shared some of his insights into why the economic climate of 2020 is much different than it was in 2006, 7, and 8. And although in some parts of the country a slowdown is predicted, he does not see a crash on the horizon. And the areas where he's anticipating the most impact are those where the median household income has not grown nearly at the same pace as the average or the median household price. And so he's anticipating some slowing down, but not a crash just because of the state of the economic environment that we're in. One of the things that was interesting, you can see here how showings of real estate have been impacted in North America from mid-March until now. You can see it starting to increase a little bit here in the current present time, but and we'll start to see that level out a little bit more and increase over the next several weeks. And so showings have been impacted. There is a slowdown simply because of the stay-at-home orders that people are in. But what if there is a slowdown? What would that mean for us? What would that mean for you? If the market were to slow down and kind of catch up with incomes, it could equal a great time to buy and a great time to own rentals. And so I would encourage everybody to do what they can to be in a position to increase your portfolio, increase the properties that you're buying. There's a lot of different opportunities that could be on the horizon. I believe it's always a great time to buy as long as you buy it right. But a slowdown just could make it more competitive for and make greater opportunities. And then I want to share a quote. I was on a webinar a few weeks ago with Jeff Hoffman. He's the founder of Priceline. And he shared this quote. I had to write it down word for word and go back and watch it. But he said, "You will be defined by how you help your tenants and customers during this time. Step up, make a difference, and they won't forget it." And this truly is a time for us as landlords, as investors, as owners, to show that compassion, show that understanding. It doesn't mean we're forgiving rent and removing that obligation, but I've been really impressed and inspired by many of our clients who have said, you know what, I know that this is a difficult time for a lot of people. I'm going to give my tenant a credit this month, or I'm going to help them out through this period of time. And if you haven't done that, that's okay. You may not be in that situation of being able to, but it's just been inspiring to see how people have come together through all of this. So I want to ask this question. How will you turn this into an opportunity for your life? I'd love to see in the chat just something you are doing or planning to do to turn this environment that we're in currently into an opportunity in your life. And maybe it's buying more properties. Maybe it's improving something in your life, focusing on improving relationships. Maybe it's increasing your charitable donations to help those in need. Let's just give it a second here and see what you guys are thinking and some of the opportunities you're looking at seizing at this time. So I'm trying to pull up the chat here. Garden
You, we've got
financing.
Chad looking to buy more properties.
Gardening, I like that
helping
one.
others.
Family.
Self-improvement. Reach out to family, often awesome friends.
Yeah.
Increasing charities. Very cool. You know, you guys inspire us. We love working with our clients, and we're so grateful for the opportunity and the trust that you instill in us. We're grateful for the opportunity to be landlords on your behalf, to work with your tenants, to help them through some of their hardships, to see them triumph in times like these. It's really inspiring to work with such great people like you. A lot of what we've shared, you may have some questions on, and there may be some specific situations you want to work through, and feel free to contact your local team. If you happen to be joining us as a guest, feel free to jump on this website here, and you can take a picture of it or jot it down. And this gives you access to all of the Keyrenter locations across the country. And you can see which one's closest to you and reach out, and we'd be happy to help answer some of your questions. But let's jump now into our Q&A. We've got a handful of questions that we want to address and have answered for you all.
There's a good one that came in. Somebody asked, does what I was talking about in deferring rent, and does that mean that we are helpless until December to do anything? And I don't think that that's true. I mean, it's hard to predict exactly what's going to happen. And there's a lot of nuances to each region, but I don't think that's going to happen. That would be some sort of extreme case, but we're going to be able to get back into the court system before that. I can't say how long it's going to take from that point, but you know, we're going to be okay in the long run. And so there you go. I hope that answers that.
Yeah, and I think like you shared with the CARES Act, I mean, that goes till July 25th. And it's not a rent forgiveness like Brandon was sharing. There's things that we're doing to collect rent. And like Brandon shared too, our delinquency rate increased by 2.43% nationwide. So that's showing that a lot of residents realize, hey, I can't just stop paying rent because it's not being forgiven. I'm going to have to pay it sooner or later. And so if they're in a position of being able to do it, they're just doing it. And that's what we're seeing across the board. Do you have any other thoughts on that, Chapin or Brandon?
No, I think that's
great.
That's all true.
You know, this question came in from Mark. Tenants will be leaving my property in June. Because of COVID-19, are there cleaning guidelines such as air ducts as well as any open areas in the transition? I'd imagine that's because of maybe potential infection. And I think if you're aware, if the property manager is aware of an infection, they're definitely going to do certain things. But even by default, check with your specific property managers, because they're working with cleaning companies who, because of all this, they are increasing the level of cleaning and doing some different things to help mitigate any liability for you that, you know, there could be potential, you know, for infection. So,
and that's absolutely true. There's also on the other side of that, a marketing opportunity to let people know who are moving in that we do that they're going to move into a high quality, decontaminated property.
Okay, very good. This question came in from Dan. Chapin, I'll let you handle this. How is COVID-19 affecting services such as move-in, move-out, checks, and maintenance services?
That's a great question. So for move-in and move-outs, we are able to do inspections maybe the day before the resident moves in. We do our inspection. And same thing with a move-out, day after. We go in and we go in protected. As far as meeting the tenant to move in, they can pay us in advance, so we don't necessarily need to collect a check. And we have set up, and again, this is regional, you should talk to your property managers, but what we do is we can do a self move-in. We have a lockbox. and instructions and just a way for them to move themselves in, and super clean and easy. So we've been able to adjust very well to that challenge.
I'll take this one from Thomas. How long does the landlord have to wait before eviction can go forward? I think we pretty well addressed that. It's, yeah, again, with the federally backed, you've got the July 25th timeline. Yeah, like even in Colorado, they want evictions to still go on for, the governor wouldn't shut things down because he's like, for things like domestic abuse and meth labs and that kind of thing. So I think they're trying to kind of keep things up and running to some degree, but yeah, and again, some of this we'll just have to wait and see, as we may have a big line of people trying to get in queue when it does open too. So there may be some delays in that regard.
Okay, very good. Let's see. This came in from Tony. How is the COVID-19 going to affect the ability to find new tenants for landlords whose leases end within the next 4 to 6 weeks? Chapin, you want to take that?
Sure. We touched on the fact that surprisingly, leasing activity is pretty strong right now. Maybe not true in every single market, but the people I've been talking to have generally found that when shelter in place first happened, there was definitely a fall off in terms of leasing traffic. But today we're kind of back in business, and the question is the office set up to operate as usual? And if they are, there's a lot of demand out there for housing. So we're in a relatively good position.
Yeah, and I think, like you said, market by market, just check with your local team, because here in the Salt Lake area, it's actually picked up quite a bit over the last couple of weeks. It slowed down for a few weeks in the higher price range homes, like 2,500 or over that. And in some of your markets, that's actually not a higher price range home. So you take that with a grain of salt. But yeah, I think we've seen that as well. How about you, Brandon?
Yeah, I mean, I shared our statistics on rental applications, so we've seen a huge kind of bounce back, and yeah, I'm looking at it every week, but yeah, it seems to be encouraging right now.
Okay, this came in from Zora. How should owners approach rent increases and renewals? And that's a really good question. At this time, a lot of our offices are looking at trying to retain good tenants. And so what that means is, if we have a tenant that, historically has been just such a great person to work with, they've been paying rent on time, taking care of the place, we want to do what we can to work with them, because the last thing we want to do is have this great person get out on the street and not be able to find a place. And so having some sort of rent deferment for them might be helpful. And trying to renew the lease once they get back on their feet will be important, because we want to keep them in place. And so one of the things to incentivize people from moving out that a lot of offices are doing is not increasing the rent for this year, or on a case-by-case basis, looking at their situation and maybe not increasing it, as well as offering some incentives. So I have a rental that I wanted to make sure that the tenant stayed, and he actually wanted to stay for 2 years. And we offered not to increase the rent, but also to credit back a few $100s as an incentive to keep him in the place, because he's been so great. And although the rental market is still good, we just, we don't know what the next several months is going to give us. And so we want to be prepared and do things that we can to keep really good tenants. Now, if we have a tenant that we just kind of want to move on, then let's kind of work down that path and start transitioning them out when the time comes and when we're able to do that. Good question. You guys have any thoughts on that?
Yeah, it's just, I would say for now you have to assume a $0 increase for 2020, but we'll see. I mean, again, it's hard to predict the future, but let's just be prepared for $0 rent increases this year.
Yeah, I'd agree. At least until we see, yeah, in 3 or 4 months it might be different, but as of now, that's kind of the approach we've been taking. We've got this question from Leanne. My unit is vacant now. When a new tenant comes in during this period, will they also fall under new rules of protection? So basically the answer is yes. There was no provision for, when the lease was signed or move-in date or anything like that in the CARES Act. So assuming you are under that guideline, I don't think I've seen anything on a state or local level either that would exclude like a new move-in, unfortunately. So yeah. You guys have any?
Yeah, the only thing I would add is, our offices do such a fantastic job screening residents. And so if there's a tenant looking to move in, they're doing really thorough income checks and employment. And so I would anticipate anyone looking to move in the next several weeks that has a stable job, stable income, the odds are that the things will work out just fine, because a lot of people have been furloughed already. I know that there's still going to be some on the horizon, but I think just adequate and thorough screening is going to be really important to see that we're not, putting tenants into a situation they can't withhold their lease. And we got time for one more here. Chapin, why don't you take the lead on this and we can all kind of chime in. I love this question from Jim. Will we have to let our renters live rent-free? And I think a lot of people have been asking that, just with everything going on. And I think there is this misconception that, tenants can live for free. So Chapin, why don't you like that?
No. Yeah, the answer is no. Rent will be due rent is due and will be paid for the most part at some point. Again, there's a lot of stuff happening quickly. In my market, there's a movement for mandate that owners reduce rent by 25%. By the way, all of the owners in California should be writing their representatives appealing that thought process. But for the most part, it's my opinion that no, we're not waiving rent. You are not going to lose rent through December. If something extreme happens, we'll probably still be able to do something before then. And I just don't believe things are going to be that drastic. You guys, what do you think?
I'll let you go, Nate.
Yeah. I mean, it's definitely, we haven't seen any rent forgiveness. I think, like I shared earlier, the vast majority of residents out there, especially in our portfolio, they're taking their responsibility to pay rent seriously. Mm-hmm. And they don't want to get behind because it's going to make it even more difficult for them. So a lot of them are reaching out to family. Others are reaching out to their places of worship. There's been this kind of national call and even worldwide call amongst many churches and religions to be a beacon of hope for a lot of people. And so they're getting some assistance there and other places. And so, I mean, one of the questions that came in on the chat was, if someone gets behind, how are we going to help them get caught up? And a lot of that is it's going to take a little bit of time. Mm-hmm. We have some clients who have offered to waive certain portions. We have some offices even who have donated to help their residents out. And there's just different things that we can do to be creative to help people that are in need. And it's a really cool time to see the generosity within our portfolio, the offices, the property managers, even tenants who have offered to help cover some delinquency for other tenants. They just find themselves in a position of abundance and they want to help out. There's been GoFundMe accounts set up to help people. And so to me, it's very inspiring. But you guys, thank you so much for being on today. We're going to go ahead and wrap this up. But again, please reach out to your local office to talk about specific situations that you might have questions on. And thank you so much. We plan on doing this again, not sure when, but we'll keep you posted. And thank you so much for joining us again. And everybody stay safe and stay well. Thanks, you guys, and thanks, Brandon and Chapin. Appreciate
care.
it.
Thank you, guys. Great.